deviating, so that we can stay focused. And so everybody has what they need and the information they need in order to put together their recovery plan so that we can engineer the process. If you haven't watched a YouTube video, please don't put your hand up. This is only for people that just watched a YouTube video so that we know what we're talking about. And if you're listening to the recording, then just head back to the recording after you've watched that YouTube video. So I'm just going to give it a minute or so, and then we'll start letting people up. We'll have some of the usual people that may have stuff to say, but also we want to encourage new people that haven't participated so that we can get new engagement and new thoughts as well. I'm just going to mute myself and get everything set up. Okay, Azad, you have been invited to be a co-host. I don't know if Sean is here as well, whether he wants, I don't see him in the audience, but we can invite him to be a co-host if you see him as well, Azad. Okay, Azad, are we all recording? Your co-host now?
Yep, everything is being recorded. So, sorry, who should be the co-host as well?
If Sean is here, he can be co-host. I don't see him yet, but we can invite him if he comes up. He may be doing something else. Okay, so do you want to bring the first people up?
Okay, let's bring up Naja Neta.
Hey, can you hear me?
Yep.
Hey, thanks for doing the YouTube video today, and really appreciate that. One question I had was just kind of thinking this through. Just want to make sure I'm kind of thinking about this correctly. Is it a correct way to think about this game as basically we want to, as a community, dictate the rules of the game, of that bidding process, and we want the bidders to implement our plan and some of the metrics we're going to use and measure who is the best bidder, is, you know, who's got the best funding, who's got the best management team, the best security licenses, or whatever it is. Is that a kind of a correct way of thinking about it?
That's my belief, having spoke to so many different people, and that's my belief about the game theory here. That's just my belief about the strategy, you know, based upon all the reasons, and you have to make your own decision about whether you think that is the game we are playing, and that's the game that, you know, I think we need to do in order to win.
Got it. Thank you.
Okay, next speaker is Celsius Loans.
Hey, thanks, Simon. Thanks, Dazan. Thanks for putting the video on Twitter Spaces in addition to YouTube. I just want to talk about a fund manager and a potential, you know, 0.1 to 2% fee with a 20% profit. How can we think about that if we can get together as creditors, get out of Chapter 11 bankruptcy? If there's going to be a fund manager, how can we create an incentive structure for that fund manager to be competent, to bring in new users, to bring in more funds, assets under management? What would an incentive structure look like, vice just that fund manager taking 20% off the top from the beginning?
So when I said that, I just took the industry norm. So the industry norm is 2 and 20. That's how the venture capital industry works. If you go, for example, and invest in blockchain capital or Pantera capital, you know, any of the industry funds and various different hedge funds, they work off a 2 and 20. The 2 is normally the admin fee in order to cover all the legal costs, the investor relations costs, you know, all the people being able to do what they need to do in order to manage the fund. You know, if, for example, we wanted to take on some of the advisors from the UCC, the investment bank that's done all the due diligence, or any of those people to get the bang for our buck, then we might want to do that. That's what the 2% is normally. The 20% is to incentivize the best talent out there that can do that. And so the 20% is where the fund manager is incentivized in order to get the most for those assets based upon profit. So they have to increase the value of the assets from the benchmark of where they started. So if they don't increase the value of the assets, then they don't get their carry. So it's called a 20% carry. Now, if we want to, whoever is that we want to do that, if you want to attract the best talent, then you normally do a 2 and 20. Some hedge funds go up to 2 and 30 for the Ray Dalios of this world. Or we can get people to compete on price, and that could be a parameter of the auction process, provided we can engineer the bidding process where people are playing against each other in order to get that competitive. So that's my suggestion.
Awesome. Thanks so much. And then just on winning a creditor-led bid, in terms of being able to make that happen, are there any investment banks that will be willing to pair up with us to infuse capital into a creditor-led bid so that we are able to win it, vice SBF and others that are just going to bring the money?
So I'll be covering in video 6, I think, funding and clawback strategies, where that will be just on that video.
Okay, cheers. Thanks.
Okay, next speaker is I Am Vengeance.
Hi, Simon. Can you hear me?
I can hear you.
Okay. I have 2 questions. One is, like, I saw your videos, and in your videos you mentioned that there would be a 48% funds and the remaining 52% is a haircut. But after looking into the Zach email, Twitter, so he's saying that after burning the Celsius, we would be having only 34% of assets and remaining is a whole. So you saw that discrepancy, and the 48%, did you do the math, or it's just rough estimate?
It's just a rough estimate based upon the last coin report. If anyone wants to get more sophisticated with that, they can start modeling it out based upon volume weight average pricing. Forecast. If we've got some data analysts, they can start forecasting the price of crypto and the different scenarios. If we've got a really good data analyst, they can start modeling out the different scenarios where if we executed the OTC trade today, what would happen. And so it's impossible to say that number. I just put that placeholder based upon, the simple numbers on the coin report. But yeah, data analysts should go a much deeper into modeling that out, so they can start think about the optimum time if we can get the trade done, at the optimum time, and that would be a trader that would do that thing. So, but firstly, we've got to get agreement on the strategy and the way of distributing. So yeah, it could be a lot worse. It could be better. It all depends on market. Remember, we're crypto short right now. So the more the market crashes, the more the stables will be able to buy, and the better that number gets.
Okay. So in that 48%, did you included the mining and GK8 as well?
No, that's just the crypto. So here's the strategy. The crypto goes into your custody account, and the second we're out of Chapter 11, everyone can withdraw it, do whatever they want. It says the rest of it is in their investment account, and the investment account is where you have your fund. And the fund has all of these different assets in it. One of those is GK8, a custody company, and one of those is the mining company, and one of those is some equity in the company that's bidding. And then you've got all the illiquid assets and all the various other things that have been announced. So that is managed as a fund. And the reason for that is because you don't want to just distress sell those assets, from my perspective, if you believe that there's a future in the market. And so you need to do that over the next 3 years with a fund manager. And then you can maximize and have the opportunity for those to be worth a lot more, rather than giving it to the bidder and them having it for their shareholders.
Sure, absolutely. I do agree with you. And the second question is, like, how optimistic you are for the Kelvin idea. For me, it is completely ridiculous, because the Alex, he transferred all his funds before the bankruptcy. Now he want to gamble again with the remaining funds with the Kelvin idea. It's completely ridiculous. So how optimistic you are? Because I just saw before we met, so I just saw Tiffany Twitter, and she did send one leaked document. In that leaked document, their employers are actually working on the Kelvin idea. So do you think it can be passed through?
0%, and I don't believe that Celsius want it to pass through. I believe Celsius want this to go into a bid so that Kirkland and Ellis can win their strategy of releases. And that's the game that I believe Celsius are playing from my perspective. So I believe that everyone is driving towards this bidding process. You do need to, look, if they wanted to do that, they would have released a plan by now. There's no reason why they wouldn't have. So from my perspective, if I try to create the video to help you understand the game that I think. It doesn't mean I'm right, but I think it's 0%.
Okay, perfect. Thank you very much, Simon, for doing for all your work.
Thank you. Okay, next speaker, let's bring on John Q.
Yeah, hi, Simon. And I'm trying to stay relevant here, but with the complexities of this, if I'm not, please forgive me. But your mind starts going in 100 different directions. There's so many questions. So how is the Barstow's motion, I'm not sure if you're familiar with the name of it, going to affect this with the bidding process and whatnot, if the stable coins are issued to secured creditors or found to be for secured creditors versus unsecured creditors?
Yeah, so there's two things we got to do here. One is we got to do a bit of diplomacy. So I've tried to reach out to all the people that are in charge of all the different ad hocs, and I suggest that we align around a creditor-led plan, or we're just going to fight it out in courts and create further delay. The more we fight it out in courts, the more delays, and they may be inevitable, because every time we ask questions about custody and loans and stable coins and equity interest groups, the more we do that, the more likely we are to get an examiner report that drives us into a Chapter 7 process. So we've got to either get our shit together and figure out what we want and what the compromise is, a bit of diplomacy, or we continue to fight it in court. And the longer we do that, the more likely we are not to get through the bidding process, because we're waiting for the bidding process, because we're trying to resolve all our issues in court. So if everyone came along and said to the judge, here's what we've agreed to do, then we can just get on with it, and we can get out of Chapter 11 before what I believe may be the inevitable. Otherwise, we're just going to settle in court, and they're just being pushed and pushed and pushed. And as I said, game theory, prisoner's dilemma, if we all go for our own self-interest, we all end up with a result that we don't want. And so let's make sure that we get together and figure out what we want before we end up with what they want.
So I would assume, again, not knowing much about that motion and how it exactly works, I would assume that those people that are trying to pass that motion are trying to put themselves ahead of the unsecured creditors. Would that be fair to say?
Yeah, that's prisoner's dilemma. Prisoner's dilemma is if we all go for our own self-interest,
Okay.
then we get up with the result where we all, snitch on each other and we both end up in prison. Whereas if we both just stick to what we said we're going to do, and don't pursue our own self-interest and agree on the strategy, then we both stick to the strategy and win. That's prisoner's dilemma.
Okay, great. Thank you. I appreciate the time. Thank you.
Okay, next speaker is Johan.
Yes, hello. Can everybody hear me?
Yeah, loud and clear.
Yeah. I'm a bit interested in this profit from everything. Now, I see there's two possibilities for the loans to figure in this plan. One is to move it to the new co and use it as a revenue center. And one would be to sell the loan book, dress it up as much as possible, and get the highest bid. In that scenario, I would expect that there will be more paid for that than the value of the principal and the interest, and that overvalue can then be distributed to new co as funds available, and or to help the other groups get more payout.
Got you. So I believe that that's a suboptimal strategy, selling all of our assets individually and all going after our, bit
But
by
hang on,
bit
hang on,
is because
hang on.
let me explain why, and then you can reply. Because once you start to sell it off, you then ask, well, what's the collateral that comes with it? And then the collateral then has to dilute the earn, and then you end up in a court process of trying to resolve that. And then you end up with some people saying, well, I'm willing to bid on those assets and I'm willing to bid on those. And you create an impossible auction where you just can't compare all the different parts. If you could, the way that I've tried to share how to do this, if you can give a home for everybody, then everyone can benefit from everything. That's what I think is the optimum game. But yeah, if we can't get that, then we have to go through selling off all the parts bit by bit and fighting.
Yes, I just don't understand why you say it's one or the other, because loans obviously can pull in extra funds, and this bid, whatever it is going to need cash as well, because a new co needs to be capitalized in order to be able to run whatever business they run. So funds are required, and here we can get funds. The other thing is there is actually this issue of property rights. We can't just brush that under the carpet, because
No, you can do two things. You can either agree as a community, or you can fight in court. That's the two ways you resolve it.
Yeah, so you mean normal bankruptcies wouldn't apply, like a bank go bankrupt, you would take the collateral of all their loans rather than sell off the loan book that normally
No, so
does.
if this wasn't done as an illegal fund, it would have been done via a broker dealer, and in a broker dealer situation, you have regulations where in a case of a bankruptcy, another financial institution has to take over all of the loan book, and then you have essentially the process I'm trying to drive everyone to right now, where you have a bunch of banks that just compete on the parameters, and it's easy to compare like for like. That was the Lehman Brothers situation. The problem here is that because it was done without the regulations, it doesn't fit into the normal model. And so we're trying to build the model. And I'm creating this educational series to try and help people understand what this looks like in the future so that we can set the parameters of how to do this. So yeah, if you were involved in a regulated institution, then you go through a different process where another financial institution has to take over. But now we're just trying to bid them off bit by bit, take different assets. And so it's a messy process that I think we can try and get what we want if we can just coordinate around a creditor-led plan and then get people to bid for each other to do that.
Okay, one final comment on that only. If you would do this the way you think, how would you retain trust for this new company? Both when
Did
it
you
comes
watch?
to...
Did you watch video 2?
I watched
video
them
3?
all. Yeah, I
Yes,
watched them all.
new
But how
co,
would you expect
new
me to
co, new
put
management.
in
Yeah,
for
new co,
loans?
new management, new brand, new risk model, and create a compelling future, which would be the subject of tomorrow's video.
Yeah,
So winning back trust is the subject of tomorrow's video.
Oh, okay, yeah, because I really would like to see how that would work, because personally, I would never deal with a company that steals property
Sure.
or has that as a baggage with them.
Here's the great thing about this model. If everybody gets their fair distribution and they get shares in a fund, and we have a compliant structure of giving that to everybody, then even if you want to go away, you just take your money away, but you also have shares in a fund, and you have to stay in order to get the benefit of that. And over a 3-year period, if they make you money, you may win back trust. And so rather than, we can make it where everybody wins. That's the whole design of this, is to try and make a game where everyone wins. So you don't get, and if you put it in custody, rather than having a business model where they have to reinvest it, everybody has choice. They trade it in for what they want. They withdraw it. They put it in cold storage. And then you just have the fund where over a 3-year period, you can win back trust. They may deposit more. It doesn't matter if they do. They may use the secondary market in order to sell and get the hell out. And that's okay. If people want out, they want out. But here's what I found at Bank to the Future. When we created profitable products that made our investors a lot of money, they stayed and they were the most loyal investors. So we get the opportunity to try and do that with this fund. If the fund manager does a bad job, then everyone will be pissed too. But market conditions are market conditions. So this is why you can overcome those issues by creating a compelling future together.
Okay, next speaker is Neo.
Thank you, Hassan. Hi, Simon.
Hello.
Good. Okay, I hope everybody's buying at this low prices. Just want to make that comment there because this is the time.
Not investment advice.
Not investment advice. No, because we're so busy with these discussions that we don't need to forget to do that.
Absolutely.
Anyways, no
dollar cost average does better in a bear market.
Exactly. Well, one comment. The haircut that's gonna be in shares, right? The new company. I would like tomorrow if you can address how is gonna be the new value. Not the shares, but the new corporation. What's going to be the value of the new corporation? How is the process of getting that value? Okay, so I know that you're probably going to touch.
Let me answer that. So you have a fund, and the fund owns 100% of the mining company, 100% of GK8, and then you have a competitive auction with companies that want to give equity to the fund if they want to benefit from all these assets, and then you put them off against each other, competing, and their valuation is just you gotta either believe their valuation model or not, and you can compete on the valuation model. But valuing an early stage company is you use comparables, you use a model, and that's what investment banks do. And there's investment banks in this process, and so all of the companies in the bidding process, there's going to be a bunch of investment banks that are going to model out and decide what they think is the right way of doing this, and then you put it in the competitive process.
So the valuation will be decided by the market, in other words.
Well, valuation of private companies is based upon comparables, the strength of the team, and various other things. And you have future, discounted cash flows of future revenues, and there's ways. That's what investment banks do. That's what professional fund managers do. They put together models of how to value companies. You don't need to do that. We're paying the advisors and the investment banks to do that. They'll do that.
Okay, got it. Now for the income portion, whether you had a sell or altcoins, I know they're going to be converted to Bitcoin and Ethereum. Now, I think you said that
sales not going to be converted. There's no liquidity. You can't convert it.
Oh, you can convert
sales
it.
going to be burned under the proposal I put in video 1, and then it's going to be shared. They're going to get a pro rata share of the Bitcoin and ETH.
Yeah, but let's say for the altcoins, I know you're gonna take the value of the filing of that was I think July 13. Now for the when you convert it to BTC, what BTC price are you gonna convert it to? Also the filing date or the date of the conversion?
No, you can only get what the market will pay. So you do an over-the-counter trade, and you go to different over-the-counter trading firms once this is approved. And there's an element of speculation because we're going to be at the mercy of the market. You can only get the price that the market will give.
That's where I was going. So in this regard, it's more convenient that the market goes down, right? So we get more BTC or Ethereum. In this case,
it's only beneficial if the market goes down if the stable coin people believe that they're unsecured creditors too. If they believe that they're secured creditors, then it doesn't really matter because it's just simply crypto buying crypto and you're exposed to the crypto market. The market going down is based upon part of the estate being stable coins. And if the market crashes and there's stable coins, then everyone gets more Bitcoin and ETH in the OTC trade. And so the stable coins are part of it. But if the stablecoin people believe that they're secured creditors, then they would try and take a head start, and we'd end up with, a massive delay, a bad process, and all sorts of stuff.
So, and if the market recovers, then we get less BTC and ETH, right?
Well, if the market recovers and the stables are in, we get less Bitcoin and ETH for our stables.
Yeah, for stables, but what for let's say if you have a
Celsius is currently short. So if you're in a short position and the market goes up, you get wrecked. The whole grows as if the market goes up.
Okay, got it. Thanks.
I mean, not based upon dollarizing, but I'm just thinking, in terms of how much Bitcoin and ETH we get to initially distribute. So that initial percentage is, unfortunately, we're at the mercy of the markets. But fortunately, these are the worst types of markets and the worst type of conditions in the traditional markets. So there's been a real element of luck there that everybody else is seeing as very bad luck.
Okay. Thank you.
Thank you, Neil. Let's go with Dexter. Dexter, can you hear us? If not, let's go with AE.
Hello. So once again, thank you, Simon, for all that you do. So I just wanted to point out one thing. I'm not certain if non-accredited investors can do venture capitalism with the 2 and 20 model. I listened to a podcast with the ARK Venture Fund. That's one of the reasons why they did a 2.75% flat fee, which worked out better. Just minor details that I'm sure you'll iron out. But overall, I think the approach is fantastic.
Yeah, sure. I just put together the initial industry standard. These are all negotiation points if you have some companies bidding against each other on the negotiation points. But what I'm trying to get to is, if the community and creditors agree that this is the approach, then we can just have like for like comparison in the bidding process, align all the interests, and everybody wins.
Absolutely. No, I think that's fantastic. So the way I see it, I see the major risk in all of this is that we were essentially forced to sell what crypto we had low at the time of the bankruptcy. And this is about us doing this structure while the market is low or even lower, because what I think is going to happen is that soon markets are going to shift back to risk on, and then all assets will appreciate. And it may already be happening as people just get desensitized to interest rate hikes. So so my question, let's say we don't, let's say Celsius does extend their bid or their exclusivity period. And I'm not sure if you can answer this, but I hope you can say you have something planned. What can we do to allow us to make these competing bids? I guess so.
Make sure if I could give one piece of what I think the community should do here is coordinate, crowdsource in order to get to a creditor-led plan where there is consensus, so that everybody then can start working on engaging with the cards that we've got rather than trying to change the process and losing. And so if everyone can consensus around a plan, and I tried in these videos to the best of my ability to create, here's the things you need to think of. And just in a summary, why are we where we are? We are where we are because the previous management invested in long-term assets that created a liquidity crisis, and they did it without the correct regulations and disclosures, and they brought in a bunch of people that were not able to invest in those products, and so there's misrepresentations, and then there were things happening in the background that you wouldn't be able to do if you had the correct governance structure, regulations, and disclosures and suitability. So if you just I know we're all, many people hate regulations, and they've been the bane of my life for the last decade, but that's why we are where we are, because none of those processes were put in place. And then our money was used in order to invest in long-term assets, and people thought they were in a savings account where they could get instant access with no fees. And therefore that created the parameters whereby there was, long assets, and then coupled the fact that there was actually a hole through activities that the examiners will be investigating. And now you understand why we are. So what I'm trying to say is take the same model, but put the regulations in it and give everyone what they deserve, because our money was used in order to buy all these assets, and don't let the bidding process end with another company coming along giving us crumbs and their shareholders benefiting. That's what I'm trying to engineer here.
Okay, next speaker, Eric.
Yeah, thanks, Azad. Simon, in business, whether you're negotiating a real estate transaction or whatever it is that you're negotiating in business, do you believe that it has to be equal in order for it to be fair?
Interesting scenario, but I think it's more of a philosophy. I just believe in win-win. If you can create win-win, then business is easy to negotiate. If you negotiate on a win-lose mindset, then someone always feels shafted and the other feels like they won, and that doesn't create good business. That's just my philosophy.
Right, but okay, but your philosophy then kind of supports the fact that things don't have to be equal for it to be fair.
Well, I get what you're saying, and I
Right.
think what you're trying to say is that custody own their assets by terms and conditions, and I believe that examiner shows that you were actually an earn, but terms and conditions were bait and switched on you in order to meet regulatory requirements, and so that has to be settled. And if the easy way to settle is that they just get everything, despite the fact that we were probably in the same scenario and we all got shafted equally and we all got misrepresented, then maybe that's the solution. So sometimes diplomacy means that you just have to come to a resolution, but that resolution has to be achieved, and we either do it in court or we do it through diplomacy. And the problem is, along with it, my fear is that there is this examiner report that drives us into a process where we all lose.
Well, yeah, understood. And you definitely put words in my mouth there, but it's not the end of the.
I'm sorry. You say what you need to say.
No. It's fine. It's not the end of the world, because you said it in the past. Is that you think that those that are in custody didn't know didn't read the terms of service or didn't want to be in custody, and essentially, and you kind of just said it again, that we were all kind of forced there. And I think that's I know that that's a complete unfair assessment. I've spoken with many members of the custody community who actually used custody for what they thought it was. They used custody because they wanted to either hedge their risk, they didn't trust themselves with their own private keys, whatever the case is. It wasn't that all the people in custody were just forced into custody. There's also other individuals that are in custody because they tried to withdraw their funds and were then placed in custody. Obviously, they would be in a better position if they were actually able to withdraw their funds. So the fact that they weren't able to withdraw their funds and Celsius put them into custody is not the user's fault. And I just want to reiterate that in business, I'm sure you believe, you kind of just said it, things do not have to be equal in order for it to be fair. What is unfair is taking what someone is owed or what someone owns, taking their property and distributing it to other class members, shareholders, or other users, other creditors. And by the way, I am an earn also. You made a comment in your YouTube video that you just did. Very impressive, by the way. I am supportive of your plan. I'm just not supportive of your position in custody. But you made a comment that, custody is fighting to dilute. It's something like, so not exactly your words, but you did say dilute, that we're looking to dilute other creditors. And that's definitely not a fair assessment, Simon. People who have their funds or their crypto in custody own their property. It was never an asset of the estate based on the terms of service. And therefore, your plan is actually diluting custody, not the other way around. If you take a portion of my custody and distribute it on a prorated basis to other creditors, you're diluting the custody. It's not the other way around. I just want to be clear about that. And I was honestly a little bit upset at the terminology that you used there, because it is very misleading. The other thing is that
let me respond, if I may.
Yeah.
So thank you very much for saying that. I think this is a perfect platform for you to express things that I may not understand. My understanding of the world is my memory of what happened, and maybe I'm completely wrong. And you've just expressed to me that there are complete circumstances. I just remember when the custody service was created, 89 days before the situation, and I remember just getting loads of people going absolutely berserk, saying Celsius just drove me into custody because the regulators put together a cease and desist, and they put together some kind of crazy solution in order to solve it, and then they switched the terms and conditions to say that the money is theirs. And I just remember that process, but maybe there's something I don't know. So
No, yet
yeah.
no. I would encourage you that you're probably aware there's a separate custody accounts Telegram room specific to custody account holders, and you're not in that room. And I would encourage you or anyone else who may have the wrong conception about custody and what our plight and our fight is here to join us on Telegram, even if you disagree with us, to at least join us and engage with us, so that everyone could be not just you, Simon, so that everyone could be fully educated about custody and the different individuals who are in custody. You know, the reverse could be said, Simon, that there are people, including myself, by the way, where when I heard that custody was coming out in April, I put as much of my crypto as possible into Earn because I didn't want my funds in custody. So I took, I bought more crypto at a time when I think market was for high at that time. I put more of my crypto in Earn just because I knew that if I removed it out of Earn, it would stay in custody and never go back to Earn, never earning this bullshit interest that Alex was promising. Right.
Yeah.
So there are a lot of people that got fucked that way.
Okay.
With that being said, like I said, I don't want to take up a lot of, again, I'm sorry.
Sure. Let me respond. So Eric, I think you've got some really good points. I think we need to speak more. And next week we need to figure out the solution. That we all agree on. And I think you know a lot of stuff that I don't know, and I think I'm generalizing in a way that upsets you. And I think we're on the same team. We just need to figure out what's the information missing and what's the solution, and let's get it done.
Yeah, I appreciate that. I don't think that we're far off. Now that we're all in a nice kumbaya place, what I will say is at the end of the day, I just don't see how your plan benefits custody holders. And what I mean by that is right now, custody loses, so to speak, if we're labeled an Earn and we have to share the same prorated haircut as Earn. Okay, that's the worst case scenario for custody.
So let's put the subject down.
Sure.
If creditors can reach consensus that custody get what they want, I'll go with it. If that's the solution, I just want to make sure that we don't end up in a scenario where we're all voting against each other and filing motions against each other.
Yeah.
And so, I mean, it's not that big. I gave the numbers. It's 110 million dilution, but then then the loans will come along and say, well, we need ours, and then the stables will come and say we need ours, and then the equity will come along and say we need ours, so it suddenly becomes a big thing. So either we leave it up to the court, and maybe that is the correct process, or we figure out, is there a better result for all of us? Because remember, there's the tax question. And it may be tax beneficial for Celsius to own our assets rather than you to own your assets. And so if we understand the game, then we may be arguing about the wrong things.
Yeah, understood. I don't want to take any much more of your time or anyone's time. I know that most people here are in Earn, and obviously I'm in Earn also, and I feel horrible for everyone that's in Earn. So I don't want this to be a custody versus Earn thing. I just want those that are in Earn, if you were in custody shoes, how would you feel? And don't switch sides because you're on the opposite side now. If you have a heart or if you're a person of rational, and I do believe that you're a person of rational. That's why I don't understand your position on custody and some of the other things you said. But I digress, and I do appreciate the time.
Thanks, Eric. Next topic.
Just a quick question back from Celsius Loans.
Hey, Simon. Yeah, I'll just respond. For loans people and collateral, yes, we obviously believe the collateral is ours, but we do not want to get drug out into any type of court battle. We want to come to a positive sum solution with Earn, custody, and loans that we can move forward in a new co. It's finding the common ground for what that looks like and how we maintain loans is a profitable revenue stream for the current borrowers and then future borrowers. That's the only point there. Thank you.
Yeah, I reckon if we get out of our reptilian brain, and I'm in my reptilian brain very often and into our empire building brain, in a true, genuinely collaborative meeting with empire building brain, I reckon we can figure out a solution that's better than anything we're talking about. And let's do that next week.
Okay, let me bring up Alex at Women in Digital Assets. I received a DM from Alex, so let's.
Hello, everyone. Good afternoon, evening, wherever you're at. Thank you, Simon, and your team for everything that you're doing. So on the tails of the custody conversation, I did want to share that I am 100% in custody due to the nature of the regulatory risks that I was seeing back earlier in the year with the launching of the custody program, along with the market risks, I went ahead and I swapped 100% of my account into BTC. So I kind of echo, and I may be a one-off case where I put myself into custody to like guard my risk, to kind of hedge my risk, not knowing that this was all going to come down the road. So I just wanted to offer that perspective, that there may be others that did switch into custody to hedge the regulatory and market risks that did end up kind of playing out, not understanding that Celsius would implode the way it did. And that's all I wanted to comment on.
Yeah, thank you very much. Completely open to your perspective. And if I've misrepresented the situation in any way, definitely not my intention. Yeah, and so yeah, let's get the solution out there. But let's not make this whole space about custody versus earn. Let's cover it. Let's try and get back on topic if we can.
Okay, let's bring up RHS.
Great, thanks for having me. My name is Richard, and Simon, a question here regarding, how the fund, the NewCo, and Salt and Bank to the Future, how they're all sort of align with each other. Maybe it could be explained in a more simpler way. I'm slightly confused, and maybe others are as well. But it's
yeah. Did you watch
video?
Did you watch video 3?
I did, and I watched the other one as well.
Let me have another attempt and help you try and understand why I can't give you a straightforward answer. If somebody wanted to be in that bidding process, then they may have to sign certain documents, and that may restrict things that person could say. And if the community, can put together a creditor-led plan, and they would like to give that to a bunch of people that may be in a position to bid, with a commitment that they implement the plan that is best for creditors, that creditors want, then that company might compete with other companies to make sure that they give away to the fund the most amount of equity that really benefits the value of the estate for everybody. And if you can create a way where rather than everyone's bidding on their assets, we actually engineer this, where everyone's actually bidding for what percentage of their company they're willing to give to the fund, we might be in a position where we get a lot more than we ever thought was possible.
Okay, let's bring on Bites the Bit.
Hey, Simon, can you hear me?
I can hear you well.
Okay, I've got a question concerning the fund and the assets that are put into the fund. Will that be providing some sort of an income stream for us? And if so, what would that kind of look like?
Yeah, so my suggestion was that you just have it following, the level of, the reason you put a 2% admin fee is so that they can appoint and pay for a fund administrator, which gives you all the disclosures that you need to the standard as if you invested in a professional fund. And then you have it run professionally. For example, different products that we've created in the past, we have, companies that own shares in Kraken, Circle, a mining operation, and like some of the most valuable companies. And then as soon as they exit, like Kraken might be doing, then we get some public shares that we can sell on the market, and then that is given and distributed to everybody via a platform that can distribute all those funds, and then you get a quarterly report, and every time those companies exit or something new comes in, it can be distributed for the benefit of all creditors. We've actually been through that and done that before.
Okay, next speaker, Lawrence.
Yes, good afternoon, Simon. You continue to impress all of us with your plan. I want to digress a little bit to the loans and how the collateral will work with regard to the valuation of the, not the 50% you will receive if you pay off your loan, the 50% that will stay in the new company. If the new company's value goes up or down, you could be caught short if you didn't pay off the loan. You understand what I'm trying to say?
Yeah, so what is the collateral? If the collateral is some Bitcoin, some ETH, and some shares in an illiquid fund, then maybe there's a platform that can put together those that don't want the fund with those that do want the fund in order to solve the collateral piece, if you can do it in a tax efficient manner. And maybe there's someone like Sean at Salt who's been thinking day and night and engaging with everybody that's try and put together a solution. And as long as you have securities licenses and lending licenses, you can probably come up with a really good solution where those loans are collateralized, and the people that want further exposure or the people that don't want that, or that fund could be used as collateral. And it gets more complicated than I'd like to go into.
Yeah, but you have a
Yeah.
good handle on where I'm going and why I'm going and how I'm going.
Those
In
loans
saying that,
have to be collateralized, and they
yes,
have to not be in a position where it ruins their life. So a construct has to be put together, and I believe in order to put that together, if you combine securities and lending licenses, then there's all sorts of innovation that you can have in order to get the result that you want.
very good. My concern was the fluctuation, which you seem to address. I want to state my position also with regard to, I moved over to Celsius because of the returns. And I do have all of the scenarios, whether it's in the custody or the loan or the other one, some by choice and some that shouldn't be there. But I believe a majority of us are on this platform for the returns. And the majority, I would say, not only for the returns, but because we're long-time Bitcoin, Ethereum, and other holders. We're not so much sellers.
Yeah, so what I'd like to do, if I were able to control this process, is give everyone what they're entitled to in custody, and if they want to invest it because they trust a NUCO that offers services that they trust, then that's a voluntary choice that they're not forced into. But the haircut is the haircut, and so if everybody has a fund to make up their haircut and that fund performs well and wins back trust, then my hope is that they'll want to invest further, and it may take them immediately, they're ready to trust. It may take them 1 year and they're ready to trust. It may take them 3 years and they're ready to trust, or they may say, I want out, I never want to do this ever again. But give everyone that choice. And so this plan was a way of not saying, if you want to take your haircut now, you lock in your losses. It's give people what they are entitled to based upon what we have, and then give everyone the opportunity to have an upside. And if that upside performs well, I think a new co with new regulations, with new management, could actually win back that trust if they get out of this Chapter 11 process.
Okay, next speaker is Michael.
Hello, Simon. Can you hear me?
Hear you well.
Great. Thank you for all the work that you do. It's actually my first Twitter Spaces speaking, and I think it's actually pretty cool. But at any rate, I just have two questions for you. So if a company such as FTX wins the bid and pays, let's say, X amount of dollars for the assets, and then they put them on the FTX platform, and then we can withdraw them, I guess I'm missing, how is FTX or that company making any money if they're paying dollars for assets that they end up giving back to all of us? I mean, I know there's like a haircut, but like, I mean, I guess how are they making any money?
Yeah, so to me, they're engaging in this process either because they want to accumulate the assets for their shareholders, or they want to accumulate the customers. or maybe both. And what I'm saying is the customers are only valuable if the customers are treated fairly and well. And that may take a bit of time for them to be treated fairly and well. And so to me, my ethos in business is that if this is a win-lose where the customers get haircut at the bottom of the market and you give them something insulting like $50 in order to use their account, then they come by, they play the game, and then they hate you forever. So let's make sure that people aren't competing on doing that, because that's a lose-lose. I think FTX loses. I think, well, they could end up with the assets. But I think in terms of the client relationship, it's a PR disaster to do that. And we've already started to see that with the Voyager side. So let's engineer this in a much better way, where creditors get what they deserve to. And if FTX buys my and locks out my Bitcoin and ETH at the bottom of the market and gives me an insulting offer, I will not be happy, and I will never want to use that company again.
Okay, how are we doing for time? Do you want to do another 5 minutes or 10 minutes?
What did we start at?
I think we were 5 minutes late.
Okay, so we'll go to 1 hour exactly.
All right, so let's. So we're just one question, please. We do have a few new speakers, so let's go with Thomas Hall. Thomas Hall, can you hear us, Thomas?
Yep. Thanks, Azad. Simon, thank you. I don't want to take us off topic, but I'll just say, just thank you to Simon and you, Azad, and the community, just for all these spaces. It's really been helpful through the whole process. So I'm another example of one of the customers that I purposely moved half my assets into custody, but really, I'm in support of really any plan that gets us out of Chapter 11 quickly. So Simon, just want to say, thank you. Super supportive of the plan, even if that means I take a haircut on custody. Obviously, it's not what I would want, but really my goal is I hope aligned with the community, and that's to get us out of Chapter 11 as quickly as possible. So, but thank you. Appreciate the time.
Thank you, Thomas. I can see that Sean.
Yeah, let me comment on that. There are some people that would want a lot of exposure to the fund, and there are some people that wouldn't want exposure to the fund. If we get out of Chapter 11, all we need is a compliant marketplace to put those people together. But yeah, if it turns out that the best solution for everybody is that, that custody get what they want, I'm not dictating the terms here. I'm just trying to engineer a process where we agree on what the process is. And if we agree on what the process is, then we can channel all of our efforts into getting what we all want, rather than wasting energy on us all fighting each other.
Yeah, totally agree. Thank you. Appreciate it. Yep.
Thank you, Thomas. Sean, if you want to come up and speak, we've got about 5 minutes left. Otherwise, we'll just bring on Tecmo.
Thanks, Azad. Thanks, Simon. So I just wanted to make one quick point and comment. I know you didn't want to turn this into like Celsius custody versus loans and all that other stuff, but I think we all were misrepresented with how our money was being used. But I think those of us in custody or loans, and just in full disclosure, I have no loans, and I have some in custody and some in earn. I think everybody knew that there were risks associated with earn, with counterparty risk and all kinds of things like that. The people who were in custody thought that those were their coins, that the risk was less. And then the people who had collateral thought that there was far less risk than earn. So to me, to dilute either custody or loans collateral in favor of giving earn a higher percentage is actually unfair to those two camps, because they were specifically and purposely taking less risk based on what they were represented.
Let me try and get to how we get to the point here,
Okay.
of how we can figure this out. What I'm hearing is a bunch of people in custody that don't value the fund because they'd much rather have their assets. And what if there's a bunch of people that do value the fund more than their assets? Then all we got to do is put them together, and then we can stop arguing.
Yeah, no, I absolutely agree. You made the assumption earlier that, and I know I'm not going to rehash it because you're going to talk to Eric later. I don't want to waste people's time, but I just wanted to
Yeah,
enunciate
there's a bunch
and
of
illustrate.
people. There's a bunch of people that weren't suddenly put in against their will. There's a bunch of people that did it deliberately because they wanted to be in custody. That's what I'm hearing.
Yeah, we wanted to de-risk in some manner, whether whatever that shape or form took place. We wanted to de-risk from earn, and so if the plan says everyone gets treated equally, well, then what you're doing is saying, hey, earn people who were knowingly taking risks to
Can I,
get
can I,
that.
sorry, can I just interrupt?
Yeah.
What you're saying, again, I just reiterate, I'm trying to get it to, what you're saying is that you value your assets more than the fund and you'd like your assets back over the fund. There's a bunch of people that value the fund over their assets. And so what we need to do is put you two together, and we don't need to really worry about what's justice and what's right. We just get the solution that everyone's looking for.
Okay, the final, I guess we got one more question. Let's bring on Bob.
Hi, can you hear me?
Yep.
All right. Hi, Simon. How are you?
Awesome. Thanks, Bob.
All right. So, first of all, my name is Joe. I kind of have a satire account. Not that it matters, but I did have a very large amount in Celsius, and I had it on the earn, and I had it on multiple. I was involved with, I think, every single scenario. And I, one thing I just wanted to bring up was I'm worried that people are misinterpreting Simon with a few things. So first of all, I want to vouch for Simon in the sense that I've seen that he's been involved with the space for many years, and there's people that have been in the space from the beginning that vouched for Simon, helping him out in similar situations. So I really can't tell you what that has meant to me, and I know I'm sorry for your loss, Simon. I know that you lost your father around that time as well, and I think I just think you're doing God's work right now, and I think a lot of people misinterpret you as valuing some over the others, or basically some people are interpreting it as you saying that you're suggesting that they invest in this new company, and you're just providing an alternative, and I would say you're providing an addition. I think that's the best way to explain it. So I'm a little nervous, guys. Sorry, this is my first time speaking on this live account here, but I think you're just providing in addition to what we all are going to get, which is a haircut. So my opinion is that we're in a terrible situation. Everybody got screwed. Everybody has been misrepresented. There's no way that any of us, whether you had a loan, earn, or custody, I think there's been complete misrepresentation of the risk we were taking the entire time. And I think I even treating it all equally, and I do believe that we can have a fair way out of here. But I guess my question for Simon is, beyond that, if we were going to be specific, instead of just saying we all need to come together, which I do think we do, we all need to come together, and that's our only chance of getting out of bankruptcy. Other than that, what do you think the main topic is that is going to slow us down? Is it going to be the lawsuits from the loans? Is it going to be the lawsuits from the custodies? Is it going to be the lawsuits from third parties? Like, beyond us all agreeing. So that's it for me. But thank you guys, and I'm sorry I'm a little nervous and a little off topic.
No, Jay, it's very well articulated, and I can see the genuinity in what you're saying. So thank you very much for that. And that we'll take that as the last question because we're on the hour. But it is. We have two choices. We hash it out in court, or we find a solution that works for everybody. And maybe it's just too hard. Maybe there's too many people. But I believe that there are people out there that have stepped up for certain types of leadership roles that seem to be representing and working day and night in order to try and communicate what their groups want. And so let's just give it a shot at trying to figure out whether there is a solution in an empire building way and try and avoid the reptilian way of taking it to the court. And I know, I've been involved in this industry since 2011. And I've invested in some crazy things over the time and been involved in all sorts of issues. And I've never actually settled. I've never actually had to settle in court or had one lawsuit. I'm hoping that this isn't the first time and that Celsius doesn't end up suing me. because I'm dangerously on the line to trying to support everybody in getting what they want to get. But I just believe that there is a sense of doing the right thing that is going to win in the end. And I just want to put some faith in that process, and try and engineer the right combination of words that help people understand that I'm not really your enemy. I am trying to support you. And I'm just trying to put things in a way where, based upon lots and lots of experience, obsessing over this topic for the last 2 decades, I just want to bring all that to the table. So at least if we can't get it all together and everything goes wrong, we've got the most educated community of investors in the world because of going through this process. And I just want to, at the end of this, write that chapter 11 in my book rather than write chapter 7. And I'll work day and night. I'll bring together whatever we need to do. I'll bring the resources to the table. I'll share my information. I'll do whatever is required until the final part of this process. And we either win or we lose. And I think we win if we stick together. And that's just the belief that I hold. And there is a higher sense of purpose that I believe comes from this, because this is a unique moment, a unique set of circumstances, a unique bunch of technology, a unique market. And I just want to believe that there's something guided here that we're all creating together. So with that in mind, remember, you are alive at the most interesting time in financial history. It's really rough for some. Let's make sure it's great for others, because we've got to get on the right side of that change. And I'll just keep presenting each day what I think is the framework for you to go and tweak, improve. Let me know about your opinions. Let me know where I'm not hearing your interest. And if I can do anything to support in that process, I'll fight to the end for my funds. And that's what I'm doing in here. And I'll give it all I've got. And everyone else can participate in that process, because I've actually thoroughly enjoyed understanding all of these different perspectives and working with all of you in just this crazy scenario. Let's just turn something awful into something great, because there's enough pain in the world right now. And let's make sure that all of our assets over the next years turn into something whereby this actually turns into one of the best decisions we ever made. Or if we lose together, we all lose together, and we support each other through the process. Okay, so I'm going to be over and out. Tomorrow we're going to be covering creating a compelling future. That's where we go from, something a bit more exciting to me. Please do continue. Take this information,